Okay, thanks everyone for sticking around. I have a very important question. Where can one get good coffee in this venue? Perfect, I'm coming to you after this. Okay, so the next talk that we have is slightly different from everything that we've been talking about since this morning. It's more about the Cryptopunk ethos and what remains of it and what's going to happen to it in 2026. And we've got Otto from YAP Global joining us on the stage. So let's welcome him.
Hear me? Yes, you can. Here we are. Yes, thank you. So my name is Otto Jacobson. I'm the CEO of YAP Global. We are a PR consultancy working in digital assets, crypto, and everything related to that, including fintech and AI. And we've been in the space for a long time, since 2017, and we've been very happy to work with ETHDenver for many years now. Consider ourselves part of the family, so it's great to be speaking with you today. But as my friend said, we're going to be speaking about something a bit different. We're going to be talking about the cypherpunk or the Cryptopunk ethos in 2026 and what remains of it. And especially as we consider what is happening with private money issuance. I mean, we're going back to this period in history where we have private issuers of money, which is something we've had in history before. And I think it's super interesting what's going on. There's some challenges, but we'll work through it together. So my friend Dean here, he's a smart guy. He was talking about tokenization earlier and stablecoins. And stablecoins have had fantastic growth over the last couple of years. You know, these are volume numbers. They're in the trillions, and in terms of issuance, they're in the billions now, and this is only set to increase. Apparently 10 trillion monthly we saw in Jan 2026. Maybe you can challenge me on that. But these numbers represent higher volume than Visa and MasterCard combined. So we're not just arriving, we have arrived as an industry. And US regulation is obviously a big driver of this with the Genius Act in 2025. And I guess just to go into the details a little bit, stablecoin issuers, as some of you will know, have to have one-to-one reserves, and they can choose to put it in bank deposit, or they can choose to put it in T-bills. And of course, T-bills are higher yielding, so they will put it in that if they can, and they can. They have to issue monthly reports and annual audits. They have to have full compliance with anti-money laundering laws. We'll talk a little bit more about that. And they can't pay interest to users, which has been something that has been debated in light of the Clarity Act as well recently. And they have to use federal or state-regulated custody providers. So why does this matter? Well, in terms of if we look at the reserves, I mean, I used to work in debt capital markets in banking. If you told me that two stablecoin issuers, that two crypto companies would hold almost 20% of the volumes of T-bills that US commercial banks do, which they do currently, they hold 2% of all US T-bills. That's crazy. That's huge numbers. And it's, as we looked at the volumes, the issuance is only set to increase. So I don't know, maybe someone has a forecast for 2026 what the number will be at towards the end of the year, but it's definitely going to be a lot higher. So these players, here we mentioned USDT and USDC, there's obviously others, they are the biggest ones. They are going to impact the political process in the US and with MiCA in Europe as well, and other jurisdictions massively. And if we take a step back to why we're kind of all here, I mean, some of us are here to make money, that's fine. We do need to make money, we need to eat, and we need to live. And I didn't come into this space with this sort of as like a checklist for me to tick off and then feel like, oh yeah, I'm in crypto now fully. But I think there are some important stuff here. Decentralization, self-sovereignty, privacy as a fundamental right, permissionless systems, censorship resistance, pseudonymity, transparency through code, cryptography over institutions, financial freedom as a moral commitment, and open source ethos. These are all kind of good things. And again, it's not like a checklist that you have to tick all of these off to be credible in the space. But I think the point is that these are kind of ideas and ideals that we want to work towards as an industry. And I think ETHDenver has always highlighted that and has always been a part of making sure that we do value and we do put these ethos up front, right and center. But I guess just taking an example of a regulation that's coming into place that you might have experienced if you use a centralized exchange, which you kind of have to if you want to move money off crypto and into your bank account, which we still have to use the travel rules. So this is a global anti-money laundering standard where exchanges, wallets, and other crypto service providers, they have to collect and share personal information about me and you, being the sender and the recipient for transactions. So where does that leave privacy? Where does that leave pseudonymity? Can you still engage through those kind of ideals when you're sending money to each other? And of course, the platforms must act as gatekeepers, checking who I'm sending to and reporting suspicious activity. And we all want to keep bad actors out. We all want to keep North Korean scammers off our platforms. But there are trade-offs here, right? Self-custody and permissionless transfers are made more difficult. So this is just one example. And just to zoom out where we are, I mean, I run a PR agency. We talk a lot about narratives, and the narratives at the moment is quite bad. There was an Atlantic article recently that said basically crypto industry got everything that it wanted. We got ETFs, we got ETPs in Europe, we got regulatory clarity, we got institutions buying into crypto. Yet the sentiment, if you ask people here, is pretty bad. People are feeling a little bit depressed, and price action would confirm what I'm saying. I mean, the price, Bitcoin is down 45%. So why is that? I don't know, but I think there are some challenges to the ethos, and I think the solution is that we go back to the ideals. We go back to the ethos, and we start building towards these little high-minded, little highbrow ideals, and move away from just trying to make money and just caring about institutional adoption. I do care about that. I think it's a great thing, but let's keep the ethos front, right, and center, as I said, because what's really at risk here, we can see privacy being eroded, undermining pseudonymity, reintroducing trusted intermediaries, which is something that everyone used to talk about, that we shouldn't have trusted intermediaries, but we're seeing the re-emergence of them. And it threatens permissionless participation, it expands surveillance, and has chilling effects on activity. So that's kind of the main point of this. And I guess to leave it on a positive note, there are people building solutions that will hopefully become mainstream in the next couple of years. I heard someone say that currently the number of kind of privacy-preserving stablecoin transactions is zero, basically nothing. But even as I look out now, I see Aztec, they have a booth here, they're building privacy-preserving solutions. I see Aleo behind them. So there are people building the right kind of things. I think the price action that we saw in Zcash last year, sure, a lot of it was driven by speculation and people wanting to make money, but people were still wanting to believe that Zcash as a privacy-preserving asset and tool could also make them money, and that's a good thing. But there is hope out there. I just think as an industry, we need to go back to these ideals. And I guess we've got to ask ourselves, what trade-offs are we willing to make as we build these solutions and infrastructure? So thank you for listening. This is the way to connect with me and the team. We work with the leading projects in the space, and we would love to chat with you more. Thank you so much.